Let's hear some more from HUD Secretary Steve Preston, who's been our guest for this hour. Mr. Secretary, at the top of the hour, you raised some thoughts about what's happening with new capital and new loans to be out there. How much money is there? If you want to buy a new home and you're somebody who has a decent credit rating, can you get a loan?
Yeah, you can get a loan. And I think one of the important things that most people don't understand is virtually all the mortgage capital in our country today is either going through Fannie Mae, Freddie Mac, or through a government insurance program. So the government is backstopping a lot of that capital. But it has kept the market flowing. Now, certainly, it's not as, banks have tightened up some of their lending standards. Most of that's been important based on where they were, 12 to 18 months ago.
Right.
But we've seen at FHA, we've seen our share of the market go from 2 or 3% a couple of years ago to over 20% recently. So our volumes are going up very dramatically.
In Europe, are they mostly recourse loans, a lot of the mortgages?
There are all European markets are not created the same. So I think you see a lot of different
I'm leading to Feldstein's piece today in the Journal, where he says when you can walk away so easily, if you're in negative territory, why not do it in rent? So his idea, and it sounds expensive and it sounds really complicated, but it would be for the government to make it a recourse loan, low interest rate loan, and really get some skin in the game for people to stay in their house with government help. And if
recourse loan, meaning they could go after anything else you have, any of the rest of your property.
Else. That's why there's fewer foreclosures apparently over in Europe, because it's recourse, right? You can't walk away from your house quite as easily.
Right. I also think you'd find in many of those markets people have a lot more equity coming into a deal. And when you look at what happened in our market, in the sort of 2005, 2006 time frame, is a lot of these houses were being bought with virtually no money down or very little down. A lot of these instruments were ballooning were initially affordable, but ballooned to a rate that they were no longer affordable. So I think there are a lot of things contributing to the market disruption or crisis that we're seeing right here that weren't the case in Europe. Now, if I understand it correctly, I think that plan that he's proposing would assume that the government would actually lend Americans 20% of the value of their home to buy down their mortgage, and then the government would ultimately be a creditor to millions of Americans without that equity or without the recourse against that loan that the mortgage has. So that's a very big step forward.
Yeah, but if we do continue to see housing prices decline, more and more people are in that negative situation that means that they'd rather abandon than try to work their way out of it.
Yeah, there certainly are people who are underwater in their home and are choosing to walk away.
Yeah.
The vast majority of Americans are still saying, I agreed to this loan, I can pay that loan, and I'm going to honor my commitments.
Mr. Secretary, we want to thank you very much for your time today.
Thank you.
We appreciate having you here, and we hope to see you again soon.
All right. Good.
Again,
Thank you.
Steve Preston, the Secretary.